So hello, today we are going to solve October 2022 paper. Question number 2. The part A has been solved. Now this is a B question. Complete the table calculating the revised profit for the year ended 30th September 2022. So we have to correct the profit and prepare a revised profit for the year because there has been some errors. After the correction of trial balance, the bookkeeper completed the financial statements which showed the profit for this much. Okay, 5980. Alexandra, so let's that is what is given as at the beginning profit. Then she found, Alexandra then found that there had been some errors in the year end adjustments when preparing the financial statements. The inventory at 30th September 2022 was recorded in the financial statement as 23,600. The inventory count had been understated and should have been 26,100. So it is given here. Okay, so what the inventory, okay, it was understated. So the difference in inventory, 26,100 minus 23,600, so that value will be equal to, so that value is going to be equal to 2,500. So that is equal to 2,500. So this is a value decrease in value of inventory that had been accounted. So it is going to lead to increase in profit. Okay, I should have stated more inventory. So 2,500. Okay, it is a part of profit, so I'm going to include it as 2,500. It will lead to increase in my profit. Then no adjustments had been made for the 2,000 rent receivable that was owing. So rent receivable, okay, is a part of income. Okay, so that plus increase in income. Okay, increase in income. So increase in income by about 2,000, it's going to increase your profit by 2,000. So it is going to lead to increase in income by the same profit by 2,000. No adjustments had been made to sundry expenses. So we will see whether it is an increase in expense or a decrease in expense. So accrued was at 700, you have to adjust. So plus 700, you have to do whatever was the sundry expenses. You were supposed to add 700, and anything that was prepaid you had to remove. So when you do that, okay, this difference is equal to plus 700 minus 240, that is 460. Okay, this is an increase in expense. Okay, this is regarded as increase in expense. So when there is an increase in expense, it is going to decrease in profit by the same amount. So it is going to cause a decrease in profit by the same amount, 460. Okay, then you had annual depreciation on non-current assets owned at the end of the year had been charged at the rate of 20% on cost when there should have been at 25% the cost. So let's calculate this. Okay, the annual depreciation, okay, the cost should have been charged at 20%. So the expense should have been at 2%, okay, of 2% of the 2% of depreciation expense. Okay, so 2% of depreciation expense. So we will have to remove that, right? So because it was charged wrong, and let's include 25% of the same expense. Okay, 25% of expense. So which means that the change in expense that have to be done for depreciation will be equal to 0.05 percentage of that expense. Okay, so that is equal to, there is an increase in expense. Okay, so which is around, let's see what was the depreciation chart that needs to be included. So here it has on non-current asset, so you include 0.05 percentage on 88,000. Okay, that is equal to 4,400. So you have to remove the 2 percentage which you had charged, sorry, 20 percentage which you had charged, and you have to include 25 percentage of that expense depreciation. So there will be a change of 0.05 increase in that expense. So if I calculate what is the cost, okay, that will be equal to 4,400. So this is going to lead to my decrease in profit. Okay, because there has been increase in expense 4,400. Okay, then what happens is no adjustments had been made to the allowance for irrecoverable debt that should have been maintained at 4% of trade receivables. So there is already an allowance for irrecoverable debt. Okay, so if it was done, okay, they had to adjust this allowance. So for example, the trade receivables, okay, the trade receivables were at 13,000. So 4% of 13,000, that's the trade receivables. So the value is going to be equal to, so 4% of trade receivables is 520, but the provision made was 500. So you have to adjust, means you have to decrease from 800. Okay, so 800 minus 520, that is equal to 280. Okay, so there should have been a decrease in expense. This is going to lead to decrease in expense. Okay, decrease in expense. This would have caused a decrease in expense. Okay, so I'm going to call it as it is going to lead as an income. Okay, so this 280, okay, the difference would have caused an increase in expense, would have caused decrease in expense, which becomes as an income. Okay, and so it will lead to increase in profit because no adjustment had been made. He says that then no provision had been made for an injury. Okay, no provision had been made for injury claim from one of the Alexandra's employees. The injury claim was this much, so it was still left with the business. So this injury claim was not taken, or the expense was not taken away, so this will become as an income. So income, okay, income for the business will be at around 10 times 190. Okay, he says that 10 weeks it is 190. The charge they would have given is 190 plus bonus of 140. So if you add those two, 190 times 10 plus, okay, 190 times 10 plus 140, that should be equal to 1900 plus 140, that is 2040. Okay, this becomes an income because it has not been claimed, and so this would have caused an increase in profit. Okay, 2040 increase. So now let's adjust the profit. Okay, let's add up on both the sides. 2500 plus 2000 plus 280. So when you add up, it is equal to 4780. Then let's add up on this side. It is 460 plus 4400 plus 2040. Okay. So when you add up, it is going to be equal to 6900. So now this difference, okay, there is an increase in profit by 6900 and a decrease by 470. So 5980 plus 6900 minus 4780. So that value will be equal to 3860. So that value is going to be equal to 3860 pounds. Okay.